Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TRADINGVIEW. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. In today's video, I decided to speak about Euro JPY, which is a very interesting pair at the moment, both from an educational and a practical perspective, because the pair is very near to providing a very good trading opportunity. So I want to speak about the full situation that currently we have on the pair. And as usual, I will keep the analysis as educational as possible so that you will both have a good trading opportunity ready for the trading week, and you will also learn some very important concepts when it comes to multi-time frame technical analysis and order flow. So the way in which I will be structuring the analysis is, as usual, both from a technical perspective and in order flow perspective. So first, we will be looking at the market on the technical side to see what kind of situation we have at the moment from a structure, pattern, Fibonacci perspective. We will then go and see what hedge funds are currently doing in the market. So the real market movers, okay, the big institutions, which we can follow with the commitment of traders. And by being able to follow their orders, you obviously have an advantage over your competition in the market. And then by the end of the video, we will know what kind of probabilities we have on Euro JPY for a trading opportunity. So without further ado, let's get straight into the analysis. Now, starting from the monthly, what do we see? Now, on the monthly, we can see that the market is currently testing a quite strong area of previous monthly resistance, which is now turned monthly support here. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of the monthly impulse, what we can see is that the market went and retraced exactly to the 0.382 of the Fibonacci taken on the monthly impulse. Now, if you are asking yourself, what did the market retrace exactly to this level? Because the 0.382 was the Fibonacci level lining up the best with this previous monthly resistance, which after the market had broken it to the upside, was turned support, meaning that we had a confluence of support exactly inside of this area given by this 0.382 and the previous monthly resistance, now turned monthly support. And this confluence of support is exactly the area that the market tested before starting this rejection to the upside. So on the monthly, we have bullish structure and a bullish pattern. The bullish structure is this a market that has just provided an impulse above the resistance, which is now turned support. And the pattern is an impulse correction, an impulse pattern to the upside for the creation of a higher high. So at the moment, everything is bullish from a monthly perspective. Going down on the weekly, what do we have? Now on the weekly, we have a very interesting situation. In fact, we can see that the market had created this M formation. Now, in general, after an M formation, what you want to see is the market create a move to the upside to complete the pattern at the previous, in this case, a weekly support, which is now turned resistance, which in other words is the neckline of the M formation. So the previous support now turned resistance, which is the completion zone of the pattern. So when you see an M formation, you want to see the market create a move to the upside to complete the pattern exactly at the previous support, which is now turned resistance. And that is exactly what the market did. The market went up and completed the pattern at the previous support, now turned resistance, and then it rejected the area to the downside and created a lower low, after which we had this move to the upside. Now, what we can see if we look at the last candle that the market has printed from a weekly perspective is that we have created this candle, which is the candle which the next one is supposed to fill in the wick. Why is the market supposed to fill in this wick? Because usually if you have a candle like this on the weekly time frame, what you will actually have on lower time frames, so for example on the daily, is an impulse and a correction, in which the correction is exactly the wick that we can see here from a weekly perspective. So after an impulse and a correction, you expect the continuation to the upside. So let's see what we have on the daily. Now, if we go down on the daily, we can see exactly what we expected. We can see the impulse and the correction. And this correction is exactly the wick that we were seeing from a weekly perspective. So everything is lining up. Now, we had spoken about EUR/JPY quite a few times in the past. We spoke about EUR/JPY after the market had provided this W formation. I made a full breakdown explaining all the reasons for which from here we wanted to see the market complete this W formation at the neckline, and that is exactly what the market did. Then the market created a continuation to the upside, and after this impulse, I made another breakdown explaining all the reasons for which from here we first wanted to see a retracement and then a continuation to the downside for the creation of a lower low. And again, that is exactly what the market did. Then I spoke about a EUR/JPY after this overextended M formation, and I made another breakdown explaining all the reasons for which after this overextended M formation, we wanted to see the market create a nice move to the upside. And again, that is exactly what the market did. And I will link in description all this previous analysis so you can go and check it out for a further re-education and reference. Now, at the moment, what is the situation and how we can be looking to capitalize on this pair for the next opportunities? Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a trading opportunity in next video. Now, at the moment, what we can see. On the daily, we can see that the market has provided the impulse and correction as we have already identified. But generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And what we can see is that currently the market has just hit the 50% retracement of the impulse. So it has retraced 50% of the impulse leg, which is a quite strong number. Now we might make it all the way down to the 0.618 before creating a rejection to the upside, but already the 50% we do have support. Now what is easy to see here from a daily perspective is that all that zone between the 50% and 0.618 is a strong confluence of support area, because not only we have two major Fibonacci levels, but we also have the previous support, which was also support here and also support here, which is now again support here. So all this area here is a strong support and demand area for this market, from which we can definitely see a test and a rejection to the upside for the creation of a higher high. So how we will be approaching this kind of situation with students. Now let's first go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. Now on the euro, what we can see now on the euro, we can see that hedge funds have been shifting their positioning to the positive side in the long run. In fact, we went from having all the way down to minus 114k net positions with 271k shorts and 157k longs, all the way up to now having way more longs than shorts, with the maximum coming at 211k net positions with 50k shorts and 262k longs. So a massive amount of longs in comparison to the shorts, which is completely the opposite of what we had here. So way more shorts than longs. Then what we had is from this maximum, what we had was a period of profit taking on the strength of the euro. And in fact, we have seen this also on the monthly. After the massive euro strength, the market has started this retracement, also fueled both from JPY strength, but also from the profit taking that we did have on the euro lately, with massive longs getting closed from an institutional perspective. In fact, we first closed 6k longs, another 11, another 2, another 17, another 5, another 10k, another 3k, another 12k, and another 9k longs getting closed with the last reports. So massive amount of longs getting closed on the euro. However, in the long term, the shift has been clear. Euro has the possibility to be very strong in the long term, as we did have this massive shift. Now on the JPY, at the moment, we still don't have the new report. Also the euro, we still don't have the new report. Unfortunately, it still has not been released. It should be released within very, very short period of time. However, we still don't have it while I'm recording this video right now. However, even though on the JPY, with the last report that we have available, which is of last week, we see that longs have been opened. However, what we did see this week on the on the JPY and also on gold is a massive drop in strength. The JPY has dropped massively in strength, and also gold, which means that investors are taking their money away from safe havens because they think that the situation is not that risky anymore. So they are moving their money away from the JPY and gold, and we have seen massive drops both in the JPY and in gold. So definitely, there is the possibility to see the continuation to the upside, and this move to the upside was fueled by the weakness of the JPY. Now, with the new report, we should see a lot of shorts added on the JPY, or at least massive longs getting closed. We should see at least longs getting closed, even better to see shorts getting added on the JPY. But how we will be approaching this kind of situation in general with students? Now, definitely the new report still needs to come out, but if we will see what we want to see, the technical side is quite clear. So the way in which we will be approaching this is, as usual, being reactive and not predictive. Now, the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the directional aspect of the market. But the best timeframe for confirmation and entries is the 4 hours. So inside of this area on the 4 hours, what we will be doing with students. Now, at the moment on the 4 hours, everything is bearish. The market has been creating lower lows, lower highs, and just retracing from this impulse. So everything is bearish. We at the moment cannot be looking for any kind of longing opportunities until this will be the situation from a 4-hour perspective. However, things could definitely change during next week, which is exactly what we will be waiting for with students. So inside of this area with students, from a 4-hour perspective, we will be waiting for the market to shift from a 4-hour bearish market as it is right now to a 4-hour bullish market. So if everything will remain as it is right now on the 4 hours, the market will easily continue to the downside. However, if the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point we will add Euro JPY on our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside, completion of this impulse correction and impulse pattern to the upside, and rejection of the monthly and weekly support. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.